from me the tax perspective of why I want you to have a rental a year. There's 4 reasons. 4 reasons. Number 1 is appreciation. Where are my realtors in the house? How many realtors here? Anybody? One realtor? Okay, sweet. A couple? Yeah, you want to throw, this is awesome to throw down on the hood of your car with a client. Because I don't want you just selling single family homes. Man, I give an annual conference at the Caldwell Banker Regional, and they just, realtors eat this up. It's so easy to just throw down for your clients. So you got appreciation, mortgage reduction, and then you have taxes and cash flow. Now let me break this down. Students, you guys are going to love this. So, appreciation, mortgage reduction, taxes, cash flow. Let's say I go out and buy a little rental for $100 grand. Okay, that's cool. Some of you may say that's not possible here in Orange County. I agree. Don't buy it here in Orange County. I don't buy rentals in Orange County. This is why I network. This is why I get involved with the community so I can find out where the hot rentals are. Love Texas right now. Okay, so I buy a rental for $100 grand. Let's say I put $10K down, which Chris Alvin would say you're crazy. Some of you may say, I can't find a bank to finance that. Oh, don't worry. We've got all sorts of ways to do this. We've got all sorts of strategies. Oh, and I'll come back to financing within your LLC. That was part of your question. Oh, I didn't forget it. Go ahead. Okay, so I put $10K down. I buy a property. My mortgage is $90. Now, I suggest to you, according to the National Association of Realtors, over the last 60 years, real estate has appreciated nationwide 6.8%. I think it's 6.8 or 6.7%. It has outperformed Wall Street. And I'm not talking about you buying a rental and selling it next year. I'm talking about buying a rental and you're going to keep it 5 to 10 years. Do we know that California real estate is going to bounce back another 20%, 5 to 10 years? At least, right? We're in a buyer's market right now. Okay, so let's say it's 5%. I'll go down to 5%. So do I get 5% on my 10K or 5% on the property? 5% on the property. So what's my, I made 5 grand. I made 5 grand tax free. The property went up in value 5 grand. And I didn't pay any more taxes. 5 grand. I may never pay taxes on it. I could do a 1031 exchange. I could do an installment sale. I could do a charitable remainder trust. I could die, which is one of the best tax strategies because you get a stepped-up basis. I talk to clients about it all the time, and they don't buy into it. But the kids love it, but mom and dad, sorry, that's terrible. I'm going to hell. But okay, so if I make 5 grand tax-free, 5 grand tax-free, tax-deferred, whatever you want to say, tax-free or tax-deferred, what's my return on investment? 50%. Because look at, I put down 10 grand, and I made 5 on appreciation. That's a 50% rate of return right there. Okay, 50%. Now, mortgage reduction, often overlooked. Guys, I want you buying rentals that at least cash flow. And the cash flow equation I like is PITI. Many of you have heard of that? Now this is, some of you, Chris Alvin would say this is not good enough. But I have clients lined up to buy properties where the rent at least covers PITI, which is your principal and interest, taxes, property taxes, and insurance. If your rent can at least cover these 4 things, I got clients lined up all day long. They'll buy properties like this because look what's happening. Let's say the property, when you start to buy this property, you're going to make mortgage payments. What's going to happen to the mortgage? It's going to go down. Mortgage is going to go down. Who's paying down the mortgage? Are you? The renter's paying down the mortgage for you. So the property's going up in value and the mortgage is going down. And it goes down faster the longer you hold the property. But let's say in the first year, just with all that interest you're paying, the property goes, mortgage reduction is 2 grand. Let's say 2 grand. So if the property goes up in 5 grand and the mortgage goes down by 2, what did I make? I got 7. That's another 2 grand on return on investment. And it didn't cost me any more money. I said I'm only going to put 10 grand down for that rental. And it's going to cash flow down or I'm not buying it. And by the way, I just bought a cute little condo in Phoenix for $19,500. This was in October. I've got a Section 8 renter in there at $500 a month. That's 6 grand a year on a $19,000 rental. And it's already appraised at 30. And guys, the banks, this is auction property, that's all. I'm stupid at buying rentals. I'm terrible. If I'm going to buy a rental, I call Jay. Because he knows what he's doing. It's ridiculous. Okay, so 2K. Now what's my rate of return on 2 grand?
20%.
20%. Because look at I put down 10, I made another 20, so there's 20%. Now hang with me. CPAs do not talk about this enough with their clients. Taxes. The sexy part. Okay. See what's going to happen is rent. You're going to write off all of your expenses related to rent. What are they?
Everything.
Depreciation. Who gets to write off the mortgage that the tenant's paying? You do. Do you get to write off rent? No, you get to write off the mortgage interest the tenant's paying for you. So by the time you write off depreciation, interest, cell phones, travel, dining, entertainment, home office, PDAs, laptops, Staples, Home Depot, the kids, the spouse, the extra spouse. Now, what did you write off? That's a Southern Utah strategy. But, Freudian subject. Great write-off, just throwing that out. But, large maintenance costs. But anyway, so just playing, I'm going to hell. Okay, so now here's the point. Sorry, I'm just joking. Okay, now here's what happens: is some of the most underutilized tax strategies are in rentals. Clients do not write off enough travel and dining and entertainment, repairs, maintenance, the kids. This is where I'm going to get the kids on payroll. I want to talk about the kids before we get to the end of the night too. So love to use the tax strategy. We'll this year do in our office. We'll do tax returns with about 2,000 rentals. We'll do about 900 business tax returns with about 2,000 rentals for our clients. The average rental property, one of our property for our clients, loses about 8,000 on paper. That's a single-family home rental. Can you live with that? About 8 grand?
Yeah.
By the time you do depreciation, interest. Now, if you have a fully paid-for rental, you're not seeing that. But if you're leveraging your money, you're writing off interest, depreciation, 8 grand. If that's a little aggressive, let's go 6. Now, why do I say these are underutilized? Is where do I want you to buy your rentals? Do I want you to buy rentals around here anyway? No, where do I want you to buy them?
Where you go?
Where do you go? I buy rentals in Southern Idaho. Not because I want to go to Southern Idaho. Why do I buy Southern Idaho?
In-laws.
That's because where my mother-in-law lives. So every time I visit her, I get a tax write-off. It's got to be worth something. So every time I go, it's awesome. I have those little write-offs. It's great. So this July, my wife just informed me we're doing a family reunion in Southern Idaho. Okay, I'm going to write off the entire trip in either mileage or if we fly into Salt Lake and rent a car, I'm going to write off the entire travel expense because my employees, my 4 kids, are going to be working on the rentals the entire time. Every day they're going to have a job. I'm going to meet with my tenants, I'm going to meet with my property manager, and I've got 3 little a duplex and a single family home. Literally within blocks of my mother-in-law. And we're going to write off the entire trip. Legitimately. These are legit write-offs. I want you to buy rentals where you travel. If you've got to go visit grandma, or the kids where they're at college, or if you go to Hawaii all the time, fine, buy a rental in Hawaii. It's a tough market right now to cash flow, but it can work. You know what I'm saying? Okay, now, here's the thing with taxes. If you think that, oh, Jay, yes?
That's the question. How can I, because this just now hit me, how can I buy a house for my grandmother, have her live in it, charge her no rent, and write it all off?
Oh, you're gonna charge a rent.
Okay.
You're just gonna gift it. You're gonna book the rent as a gift.
And then will that be income to her?
No, because you're gonna gift her the rent. See what I'm saying? You're gonna book rent. So if you say rent is, see, how much can you gift this year to an individual? 13 grand. So how much is grandma mysteriously gonna pay in rent every month?
13 grand.
Every year, 13 grand. She's gonna pay mysteriously, she's gonna pay rent of about $1,000 a month.
Okay.
So you're gonna book rent of $1,000 a month, so you've legitimized that rental. Grandma is literally paying you rent.
Got it.
You're just gifting it to her to pay it to you.
Okay.
And now it's a rental.
Sweet, that's what I needed. Thank you.
My CPA in the house, you okay? You're okay with that, right?
Do quite a few of those.
Pardon?
Do quite a few.
Area rents are in that area, if they're not $1,000.
It needs to be fair market value. It's true.
Hope she can get a nice house.
Oh, okay. Yeah, I was thinking maybe that's too low of rent for what you've given her. I don't know. So you do need legitimate fair market value rent. That's important.
Sweet.
There are arguments that are there any other CPAs in the house? I'm just sort of throw that out. If any, please comment. You can call me out. There's several ways to skin a cat. So another point is that she may be managing the property for you as while she's living there. She may be doing repairs. You know, buy grandma a tool belt, get her out there, great. Say, grandma, we need a new antenna on the roof. Can you get up and can you install a satellite dish on the roof for me? Anyway, okay, so let's say $6,000 in write-offs, $6,000 in losses. On paper, you're losing money, even though you're building wealth. So $6,000 in losses from that rental property. Rent minus depreciation, mortgage, blah, 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 blah. So that's $6,000. If you're in a 30% tax bracket, which here in California is very realistic. I mean, just let's say 25 Fed, 5 state, that's 30%. So if you're getting an additional $6,000 write-off on your tax return, how much is that saving you in taxes? 30% of $6,000 is $2,000. So you saved another $2,000 in taxes because the rental is reducing your overall taxable income. I'll come to passive active real estate professional. But $2,000 is reducing my tax bill. I got a $2,000 refund because I bought a rental. That is a rate of return. So my return on investment, another 20%. I invested 10, I made $2,000 in tax savings. Woo! 20%. Now, cash flow. How many of you have a rental that cash flows? Anybody? Really? Rentals that cash flow? Is it possible? Of course it's possible. Very doable. And the renter is paying you enough to cover the hard costs of the property. Do you pay taxes on that cash flow?
No.
No. Hold it. You don't pay taxes on the cash flow. No. I pay taxes on rent, minus depreciation, mortgage interest, travel, dining, entertainment, kids, spouse, home office. No. See, I don't pay taxes on paper, even though I'm creating cash flow. That is extra cash I wasn't making until I bought my rental. So if I make an extra $1,000, let's just say $100 a month, just $100 a month, extra cash flow, that's an extra $1,000 to pay personal expenses that I'm going to pay for anyway. Did you get chills? I just got chills. This is so spiritual. So I'm reducing my personal expenses with cash flow that I'm not even paying taxes on. So let's say it's 1,000. Hey, one second. So 1,000 in cash flow. What's my rate of return? 10%. So guys, check this out. Let me see what this out. Okay, so I'm making 50% on appreciation, 20 on mortgage reduction, that's 70, 80, 90, oh this is crazy, 80, 90, here another 20%, 100%. I made 100% rate of return on this cute little rental in the first year. And this is conservative. This is just getting started. Chris Alvin would say you never should have put down the 10 grand in the first place. Is this nuts? Guys, this is doable, and I have clients doing this every day. Every day. And they're building wealth. Because guys, what you're doing is you're creating a little extra cash flow, and you're building wealth. You're building wealth. Are you going to retire on Social Security?
No way.
Are you kidding me? Oh, and that little 3% match, if you're lucky, at work in a 401k. How many of you are contributing thousands of dollars every month to your IRA?
Yeah.
Not me. But I'm buying one rental a year. I've got 7 rentals now.